Alright, so in this video, we'll cover how to read raw price action. Once again, price action is the best way to trade, and we need to know how to read it and understand it correctly depending on how price presents to us on a day-to-day basis. Price action can allow us to not only make money consistently, but it can allow us to do so in a way that most traders cannot, right? Most traders typically trade using indicators, Fibonacci, EMAs, a whole array of vastly different techniques. However, those things always lag behind price. Now, because raw price action movement happens minute by minute, candlestick by candlestick, as we learn to read it correctly and objectively, this allows us to always stay one step ahead of the market and then, of course, make money in the process. So let's go ahead and jump in and learn how to do it correctly. Alright, so reading raw price action is probably one of the most instrumental things you need to know how to do to trade in the ways that I will be teaching you guys over the duration of this course. So I'm going to start from the weekly time frame, drop down to my daily, and then drop down to my H4, and last but not least my H1, and just cover how to read raw price action based on how candlesticks are formed so we can understand certain things when it comes to trading. Alright, so starting from this point here, as you can see, price was flowing down. We stopped on the dime. We created a floor. Alright, floor, support, those words I will be using synonymously to represent the very same thing. Alright, but for the sake of this video, just continue to flow along with me and understand whenever I say a floor, I'm referencing support, or if I say ceiling, I'm representing resistance. Alright, so price found this floor, we impulsed up, we came back down, and we rejected off of this same floor. We pushed back up high again, we rejected off of this ceiling. Now for those guys who remember those basics, we had 1, 2, 3 rejections to the high side, giving us a triple top rejection. And then of course you can see that price dropped to the downside. We came close to our previous floor. We pushed back up very slightly, and then we came back down to that next second floor that was created after this one. Now, of course, if you take a look at it, you can see we had a bullish candle that pushed up, followed by a bearish candle that pushed down. This now gave us a double top. This now gave us a double bottom. Alright, the minute you have a double top or a double bottom back to back in the same area, that is indicative of price trading sideways. That is also known as consolidation. Another word for consolidation is actually accumulation. Alright, in the glossary of terms, you guys will have seen that. And so, of course, coming back into reading raw price action, once again, the minute I get a double top and a double bottom, that lets me know that I am trading inside of a range of consolidation. All right, now notice over the next upcoming weeks, we pushed outside of that range. We came up and we produced a high relative to the previous area we were in the market. Right, notice how price then flows down. Once again, it forms a floor. We attempt to go on up. Right, however, we ultimately failed to give us a new rally to the upside. We in fact break down and we break through that floor. All right, so when we're reading raw price action, once again, it is the creation of demand, right, which represents bullish buyers, upwards movement. It is the creation of demand that will cause the market to turn and go up. It is the creation of supply. Once again, resistance, sellers, price pushing downwards, that causes price to go down. All right, so you can see in this particular fashion, we drop down, we attempt to go bullish, and then we continue dropping down the following week. You can see that we found the floor here again, and still ultimately pushed to the downside where demand was formed, and as a result we had a following candle that pushed us up bullish. Alright, so learn to read raw price action. You can see that we dropped down for a week, we pushed up for the following week, we dropped down the following week after that. Next week we went bullish, next week we went bearish. We found the floor, we found some demand, and then we pushed up to the high. Right, notice once again how we stopped at this level of resistance. The level of resistance, the supply that caused price to turn around and go bearish go down after it attempted to go up. All right, we rejected from there, we attempt to go down. Notice how we attempt to get back down to this area of demand. Now remember once again what I said about the wicks. They represent trading activity. And so over the course of that week, you can see that trading activity took us all the way down here to the low part of where demand or where this floor was created before impulsing higher. All right, upon getting higher, you can see that we got slightly higher than the previous high that we just created. And then from there, you can see that we came into some supply. And once again, how do we know it came into supply? Because price created a bearish candle, right? And we dropped down the next 2 following weeks, right? For those of you guys who remember your patterns, you can see that we came back on up into this area of supply, this resistance, this ceiling, and then we had a nice engulfing and we dropped to the downside yet again. All right, one more push on up. You guys can start to see now what the market likes to do: create double bottoms, create double tops. It likes to revisit areas of supply or demand. You can see that it turned around and dropped and went bearish 1, 2, 3 weeks before once again finding a floor, an area of demand, and impulsing to the upside before once again pulling back and then continuing higher. All right, so continuing on, pull back. You can see we have rejections. You can see we have trading activity all the way on up to this level. However, price always closed further back down here. All right, we had a bearish candle followed by a bullish candle that took us back up into these highs of trading activity before ultimately rotating us on back down to the previous level, the previous floor that was created. All right, so as you guys learn to read raw price action, right, one of the key things you guys should keep in mind is going to be what I like to call my impulses, right, and my swing highs or my swing lows, and of course learning how to read raw price action based on how candlesticks are formed, how to understand when you're getting consolidation or when you're getting a trending move. So let's go ahead and switch to our daily time frame and let's take a look at some of these very same things. All right, so my daily time frame, you can start to see I have more candlesticks, I have more definition in terms of what the market was doing. All right, so I'll just go ahead and highlight a couple of things for you. Number one, let's pick out some consolidation. Consolidation. All right. A range of consolidation inside consolidation.